Good morning, Mr. Dalmia. First of all, you're talking about the transfer from the non-par side to the shareholder account. You see, when we bifurcated the fund, the available solvency margin is now residing in the non-par side, and it is earning. It has accretions which are coming through the dividend payment or the coupon rates on the debt instruments, as well as the profit booking on the equities. So this 14,000 crore plus is net of income tax, which we have already provided for, which pertains to after the fund bifurcation exercise, pertaining to Q4 of last year, Q1 of this year, and Q2 of current year. Now going forward, yes, this will be a strategy to create value for the shareholders. Because the available solvency margin of rupees 180,946 crores, which was bifurcated, is still lying in the non-par side. When the fund gets transferred to the accretions get transferred to the shareholder account, they still are available both for EV as well embedded value as well as for the solvency margin. So going forward, the corporation will take a call on this thing. The accretions will happen because of the interest payments as well as the dividend receipts which are going to happen on the assets lying in that fund. Plus, there will be the profit from the operations also, which will be attributable to the shareholders.
Okay. Let me now understand the big picture for the quarter gone by. If I look at the numbers for LIC, market share has gone up from 63% to 68%. You launched new products. So can I say that the business now is back on track, and that one-time COVID adjustment which had to happen in terms of market share and also in terms of market share loss is now behind?
First thing is that the strong numbers, pension and group schemes has contributed a lot to it. We are very strong presence in that. In fact, we are growing very strongly in the pension and group scheme business, and within that, annuities as well as the group insurance on which we are focusing. Yes, the COVID impact, I think we are seeing the tail of it. Our agencies, because we are dominated by agency-driven organization, so our feet on street are back in the market, and the activities have started in the right earnest, and we believe that the results, the final results, are still to come. You see, the insurance, life insurance business is such that people have to have multiple calls with the customers to finally have a nod from them. So presently also we have starting that traction has started happening, and we believe that in the next 2 quarters also the kind of growth we are witnessing, it will be there, and we will try to not only retain our market share but we will try to further increase it. This I have said earlier interviews also, that this is going to be our strategy for the future.
While your VNB margin has gone up from 9% to 15%, if I still look at the industry average, and you'll appreciate the spirit of my question, shareholders, they look at relative comparison and absolute comparison. So absolute comparison numbers have gone up from 9.5% to 15.2%. But on a relative comparison, way below what your peers have.
See, if you recall my previous interviews and during IPO roadshows also, we have clearly mentioned a time horizon of 4 to 5 years to reach the industry levels, and we are on the right track. When we bifurcated our funds, and at September 21, our BNB margins were 9.3%, which has now believe that we are on the right track. For achieving that, we have put all the strategy in place. We are focusing on the non-par side. In between, we have launched 3 new products, all on the non-par side, so that we drive value for it. But I will also reiterate here that we are having a very strong presence on the par side also, and we will continue to have that kind of focus there also. But the quantum jump in the growth will be witnessing in the non-par side. This is our strategy for the future, and we will explore all the segments, including ULIPs or the term products, as well as the saving products, health products, and the pension and group products for increasing the BNB. But I will also say here that BNB margin itself is not should not be considered. The actual BNB is also very important, and it should not come at the cost of the policyholders' interest. So our strategy will be to take care of the interest of both shareholders as well as the policyholders in a gradual manner and creating value for the shareholder in the long run.
Is there a conscious internal thought on creating shareholder value? And why I'm asking you this question, sir, is we are getting some indications that government in a sense is not very happy about the current price of LIC. This was the big IPO which went public. Even though it was not very richly priced, the market response has been very dull. The stock is nowhere close to its real value. So are you looking at consciously creating and taking steps to create more shareholder value?
No, first question is about the share price. Share price, it is determined by the market, not by the corporation, and we know what we need to do to create value for the shareholder, and we are taking all the steps for that. As I said, you see, the shareholders' value is getting created. I mean, there are various parameters which any life insurance company or corporation should look into, starting with the margins or actual VNB, the focus on the non-par, and persistency levels. Everything we are taking into account so that the value is created in the shareholder account. The price has to be determined, and it is being determined by the market. But at our end, as the results show itself, we have given a very strong performance as we had committed during the IPO also, and during the road shows also, and all those things which we have committed, we are working over that, and the results are already visible.
When we spoke to LIC chairman Mr. Kumar last time, he did indicate that LIC had advantage of strong market conditions last year and they were able to book a lot of profits. But this time around, given that market conditions are slightly volatile, that bonanza is unlikely to come into this year's financial number?
You see, we are contrarian in nature. You see, we have to have we are having our strategy in place, and we are committed to create value for the shareholder as well as for the policyholder. You see, the investment income comes mainly from three streams, as I said earlier also. The one is the dividend on the equity investments. When the companies in which we have invested perform strongly and they share dividend, yes, it gets increased, and we are hopeful that all are going to do well. I think we have already got all the dividends which were receivable this year, and there has been a good growth over there also. The second is the coupon rate or the interest which we earn on the debt instruments. That's the we are regularly coming as the investments goes up every year. So there is a growth coming every year from the new investments being made. The third part, which probably you are talking about, is the profit booking on the equity investments. Yes, it's a continuous exercise for us. We look at the opportunities when we can book the profits, and we also look at the opportunities when we can re-enter the market. So the ups and downs, both things are taken differently by us, and to create value for both for the policyholder as well as for the shareholder.
Could you broadly tell me that what could be the full year number for equity investment this year from LIC and what you've done in the first 6 months?
Sorry, can you repeat your question, please?
No, what would be this year's investment into equity market from LIC and how much you've invested in the first 9 months into equities?
See, as I said that presently I don't have the numbers because it was not a question given to me. I can share it with you, but I have a sense of it. The equity investments are more than the previous year's equity investment for the same 6-month period, and the booking of profits is on track as we were witnessing in the last year. This has come in spite of the markets being depressed in the first quarter. Actually, first quarter when the markets were depressed, it gave us an opportunity to enter the markets, and when the prices started going up, we started a gradual booking of profits. So both the things are going simultaneously, but a rough estimate is that probably in the first half yearly it was around 80,000 crore of equities which we have bought.
And to understand the growth of the sector, at what rate do you think the sector is projected in your assumption to grow for next 3 years? And what could be your market share growth? Because you have a large base, 60% plus. Obviously, the growth numbers for the industry and the growth number for LIC will be different.
True. Now, we being the largest organization, the growth will always be a challenge because the base is so huge. And if you look at the numbers which for the first half year, we have taken market share both in the number of policies as well as in the premium income. So that means we are outgrowing the market in these segments. Our focus will be, yes, we not only we should maintain our market share in the future, but we should try to increase it also. But yes, it's going to be huge challenge for us. But having a size and the distribution reach, I think we can do it. The second part is of the question is what is the outlook for the next 3 years? It's very difficult to actually predict it. Now, when the population at large start feeling like a kind of threat, as it has happened in the COVID situation, the awareness went very high. But when the things start normalizing, the same segment of the population, when somebody approaches for insurance, the willingness actually declines. But what we believe is that India going very strongly. The geopolitical events, the global events are settling down. The one concern is the inflation. The RBI has already predicted that their intention is to contain it at 4% plus minus 2%. And the figures which are out for October is indicating around 6.8%. So it all indicates very positive environment for future. And we believe that the life insurance industry will grow in the coming years as well. And the other indicators like the protection gap, which has been estimated at 83%, is also another indicator that the penetration has to increase. And the life insurance companies put together has to work very hard to capture that market. The education is another area. The population is getting educated about the need for insurance, and this will all push into a great business for all life insurance companies in future as well.
Okay. Just to wrap it up with one final question, Mr. Kumar. Second half historically is always a better half for insurance companies. That's the historical track record. Are you looking at new product launches to take benefit of that?
You see, we have enough products in our basket presently, 20 products on the non-par side and 16 on the par side. But product design and launching is a continuous exercise for any life insurance company, particularly for LIC of India. It will take into account the kind of market is available, the kind of products the customers want. The product launch also depends upon when we internally look at the processes and we think that maybe a new product is required. So this is an open question for us. Yes, we will be looking at if there is a need, we will be launching more products. Historically, as you rightly said, the second half brings more business. The life insurance business is very cyclic kind of thing. First quarter, second quarter is better than first quarter, third is still better, and the fourth maximum. Although over a period of time the things are changing, but still the fourth quarter brings the maximum of the business, and I believe that it will continue to do in the future also, although the percentage may come down. So we will be looking at all the opportunities, including launching of new products to capture the market.
But do you see for the industry per se there is need for the life insurance premium to go higher, or if premiums go higher it will start impacting growth?
No, I think that is not the question. The question is the premium design is takes into factor many things. The first is the mortality, the morbidity. Third is the management expenses, and the fourth is the interest rate scenario, which is predictive for the future. if the interest rates are going to remain hardened for the future, that means the discounting factor will be bigger and the premium rates actually should fall down. But the premium rates only can be changed for the new products, not for the existing products. So just changing the premium rates for the benefit of a particular segment of stakeholders, I think that's not a good idea. It has to depend upon the kind of product, the benefits attached to it, the management expenses which a company is witnessing as the interest rate scenario for the future, the mortality experience as well as the morbidity experience. All these factors have to be taken into account for any product to decide the premium for that.
Mr. Kumar, really appreciate your time. Glad you could join us and good luck for the coming quarters, and I look forward to meet you very soon in person for a cup of coffee.